Okay, good morning, everyone. Welcome to this session on presentation of financial statement with the aid of dynamic Excel model application. And we are going to harness two things: our knowledge of Excel application on a standalone and our knowledge of the requirement of IFRS, starting with the presentation of financial statement IS1 and other supporting standards. Now, in this case, we'll more or less look at conventionally in practice, how do we make use of Excel in preparing financial statement of an entity. And today will more or less be the first session or part one, where we'll look at a simple trial balance without more or less comparative figures in order to have the first level of understanding how we can apply Excel in this presentation of financial statement. Now, typically, this is a trial balance. And what is a trial balance? A trial balance is a list of all balances of accounts for a particular period. And every trial balance will contain the 5 elements of financial statements. And if you recall, the element of financial statement are as follows. Element of financial statement, and this element of financial statement is as depicted in the conceptual framework. And we are all aware of the requirement of the conceptual framework, which is the bedrock for financial reporting. Now, there are 5 elements of financial statements. 2 elements depict the financial position. 3 elements depict the financial position. And what are the elements? 1, we have the assets. 2, we have the liability. And 3, we have the equity. As you are all aware, assets deals with economic resources, which means we are not interested in the physical substance of what it is. Rather, we are interested in every economic resources that is controlled by the entity at a particular point in time. And that's what matters to us. And likewise, liability should be those present obligations which the company is bound to pay at a later date. And likewise, our equity will always be the residual interest in the asset after settling all the liabilities, which means our equity will always be the difference between asset minus liability. And in that light, our equity will be our share capital plus all categories of reserves we have. Okay, now the second level is financial performance. Now, there are 2 elements that measures our financial performance. The first one is the income, while the second one is the expenses. Now, what is an income in this light? Now, from the position of the conceptual framework, income is not necessarily arising from when you more or less sell items or you render services, but rather income emanates from the use of your assets and liabilities. And what does that mean? It means that when you look at income, income is derived as in your equity, which will have resulted from increase in your assets or decrease in your liabilities. Okay, and what does that signify? What it signifies is that you can make income from outright carrying on your course of business, which means you sell goods, you make income, or you render service, you make income. But you can equally make income passively based on your exposure to certain categories of assets and liabilities. For example, if you have investment, you make income if that investment increases in value without even doing anything. You could make income if you have foreign currency. And based on the changes in the exchange rate, you might make income, which means it's not until you create an activity that you generate income, but merely having an asset that continues to appreciate in value, you create income. Merely having a liability that more or less reduces in value, you earn income. For example, you bought goods on credit when Naira was 450 to a dollar. Therefore, you have a trade credit of 450,000 because you bought goods of $1,000. Invariably, today, let's say Naira has appreciated to 380, which then means that if you are to settle that $1,000 today, instead of settling with 450, which was the rate as at that time, you are settling with 380, which means you have made a gain even from a reduction in liabilities. Or where you are given a rebate on your liabilities to facilitate immediate payment or quick payment. That also brings about an income, which means income is the generality of any impact in your equity arising from your increase in an asset or decrease in the liabilities. Likewise, expense is the opposite of it. Okay, expense arose where you have a reduction in your equity, and this reduction can be attributed to either a decrease in your asset or an increase in your liability without considering distribution to owners of equity. And that is just the position we need to understand, which means when we have this at the back of our mind, we better appreciate what it is. Now, let us relate this element to what is contained in this trial balance. Now, first level in a trial balance is that in setting up your accounting system or GL management system, you start from what we call coding of accounts. Coding is very key in order to segregate accounts into various elements and various classes. Okay, and first is that you find out that you can code it in any manner that you appreciate, but it must follow certain conventions. Those conventions is to, first of all, ask yourself, are you a single company? Okay, ask yourself, how many business divisions do you have within the company? Ask yourself, how many departments do you have within the company? All those ones are based on the nature of the business. But what is generic accounting-wise is to ask yourself, what are the elements you have? And you can't have more than these 5 elements. Now, within this element, what are the subgroupings in terms of class of assets, in terms of class of liability, in terms of class of equity, and in terms of aggregate level of your income and expenses? Okay, and that's what we need to understand. What that means that, for example, when we have assets, our coding can be that, okay, for class, these are coding. Now for elements, I can say element, everything that starts with 100 is asset. Anything that starts with 200 is liability. Anything that starts with 300 is equity. Anything that starts with 400 is income. Everything that starts with 500 is expense. Now, if I go by this, the next thing is that I'll ask myself, class. Now, if you check it later on, you find out that your assets, I can further group it into property, plant, and equipment. I can further group it into intangibles. I can further group it into investments. I can further group it into cash and bank. I can further group it into trade receivables. I can further group into other receivables. I can further group it into other assets. Let's assume these are all assets we have at hand. Okay, therefore, by class, I can say for PPE, all class of PPE will start with 100. All class of intangible, we start with 200. All class of investment, we start with 300. All class of bank, we start with 400. All class of receivable, we start with 600. All class of other receivable, we start with 600. While trade receivable is 500, and all other assets is 700. Now, that is that. Now, also, within these assets, I can start to create the following, which means subclass. I can create it. Under this, I could have property, which is land and building. Under this, I could have equipment, office equipment. And finally, I could have under it motor vehicle. Therefore, which means in this class, I can make this 100, 200, 300. Now, for intangibles, I can have two categories there. For example, everything we are doing is hypothetical. For intangible, I could have, let me say, I have trademark and brands, and I have software. Okay, I could make it 100, 200. Now, in investment, I could say I have equity investment. I could say I have bond investment. Okay, I could say it's 100, 200. Okay, for cash and bank, I could say I have petty cash, that is cash at hand. I could say I have demand deposits. And I could say I have tenor deposits, that is fixed deposits. Now I could call this 100, 200, and 300. Now in my receivable, I can have two categories, hypothetically. I could have third party debtors. For example, I could have intercompany debtors. Okay, other receivables, I could just leave it like that without any breakdown, or I can still have it in terms of third party. Third party, other receivables, and intercompany receivables. Other receivables. Okay, I could make it 100, 200, 100, 200. Now, other assets, I could have other assets in form of, let me say, I have withholding tax credits. I could have prepaid expenses, and let's say that is all. Now, in this slide, I could have 100, 200. Now, let me assume that this is the maximum breakdown I could have. Therefore, what is my account code? My account code is simply, remember, anything that is blank there, this is 100. How many codes in all? You'll find out that when we look at the digits, that is 333, that is 6. Therefore, in this case, I'll show you that this is, that's 6. Is it 6? No, this is 7. Therefore, I can generate the code. This will be, because everything here is 100. Everything here, the way I have this is 100. Everything here is 200. Everything here is 300. Everything here is 400. Everything here is 500. Everything here is 600. Everything here is 700. Okay, now every other space like this are blank, and you know why? Because those ones are what we call the control account. Are what we call the what? The control account. And I will explain that later. Okay, this 100, 200, 200, 300. Now, what I'll do is that all this aspect of control will be 0, 0, 0, 0. That is 0, 0. Now, to show you the way I wanted, I can ensure that every of my item there has 3 digits. You already know how to use Excel. You go to format cell. Okay. I go to custom. I customize it to digits so that it's now ready for coding. 0, 0. So that all those where I have 0, I have 3 zeros showing. Now, what I can easily do to create my account, instead of doing it manually, is that I can concatenate it. Okay, there are 7 digits in all. Is it 7? No, there are 6 digits in all. Okay, this is giving me, okay, those are the control accounts. Now, you find out that these are the control accounts. Okay. Well, let me standardize it. I'm trying to manipulate it to give me something nice. I'm coming. Now, you can see that it's giving me something nice there, but I think what I can do again is to okay. No problem. Let me try something else in order to merge it. Okay, I think another way I can do it is to convert this to text. Let me try and convert them to text instead of digits. Okay, can you see? Which means, you know, you must be able to manipulate Excel, which means I've converted it into text so that it can see it as a code rather than as numbers. Do you get it? Which means one thing you need to understand is that there's no exact science to solving problem. It's for you to iterate, find manners to solving it. It's not like you want it to be like 1 + 1 = 2 every time. No, you must be able to think far and wide. And that's why you must throw away all boxes when we are trying to develop anything. Okay, now we have been able to generate the code successfully. Now this is for asset. We can replicate the same for liabilities. Let us try to replicate it for liabilities. I can have my liabilities into this following category: trade payables, accruals, and other payables, tax, current tax payable, and let me say bank OD. Okay, here I can replicate the same thing I have here. Third party creditors, intercompany, trade creditors, or payable, accruals, okay, we have other payables, third party, other payables, intercompany, other payables. Okay, yeah, I could say I have what's common to us is company income tax. let me say, tertiary education tax. Bank OD, let's just see it as, let me just pick one bank. Let me just pick one bank. I'll just say open line of credit revolving. Overdrafts, OD. Okay, therefore, I can code it. Okay, my trade payable, I can say is 100. My other liability, I can say is 200. My tax, I can say is 300. And my overdraft, I can say is 400. Now, under trade payable, I can say my trade creditor is 100 and my intercompany is 200. I do the same thing here. I do the same thing here. Now, probably I'll just say 100. Okay, now let's go to my equity.
Intercompany trade payables. You need code that. Intercompany trade payables.
We coded, okay. No, it's accrual within code.
Yes, sir.
Accrual 300. Okay. Now equity is 300. Under equity, we have share capital. We have share premium. We have retained earnings. We have those ones that are common, evaluation, reserves. Let's say the last one, we have fair value reserve. Let's assume that those are the items we have. Under that, in that case, I can call this 100, 200, 300, 400, and 500. Now, I can still further break it down if I have different share capital structure, ordinary share, preference share, or I have different classes of shares. You could also break it down. But in this case, I won't break it down. Therefore, these are the controls. And I'm still going to explain control account to us. Okay, let's remember that we want to convert everything to text. Let me convert everything to text. Okay, I think everything's already in text. Okay, or where you have zeros shows that at that level, they are controlled. Okay, now let's come to the income. Now I could create 4 levels of income. Now let's pick revenue. Okay. Under that revenue, I could have sales of, let's just pick a product like petroleum product, PMS. Revenue. Sales of AGO, that's diesel, PMS is petrol. Sale of DPK, that's kerosene. Let me say sales of loops. Loops, that is lubricants. Now let's assume that is that. Therefore, revenue is 100 as a line of income. And this is 100, 200, 300, 400. Now we have other income, such as interest income, interest income, we can break it down into bank interest, for example, on your savings account or your fixed deposits. You can have interest on customers' credit, on trade credit. What it means is that there are some customers that when they extended their period of repayment or payment of their obligation, there are some contracts whereby if you grant 30 days and they're unable to meet it, it attracts interest because it affects your own funding requirement, which will force you to go and borrow money. Okay? Now, let's assume that's the category. Let's now have category of other income. Now, other income we can have like gain on disposal of assets. We can have things like FS gain. We can have things like FS gain. We can have things like, what other income can we have? We can have fair value gains on financial assets measured at fair value to profit or loss.
How about bad debt recovered, sir?
Okay, we'll come down to, we'll look at that. Okay, we can also put that there as a line. Okay, I can say bad debt recovered / impairment gain. On receivables. Okay, nothing is cast on stone, depending on what you are exposed to as an entity. Therefore, here I have interest income as 200, I have other income as 300. Therefore, I could have this as 100, 200, 100, 200, and 300. Okay, bad debt recovered, is 400. Therefore, these are the control accounts. And as I've said earlier, I'll still explain the control account. Now let's go up, drag it down, sorry. Okay, this also you drag it down. Okay, nothing here. Therefore, our income, you drag it down. Now this showing, because it's seeing it as a value. That's why it's going like that. Now, my expense is 500. Okay, within my expense, I have category of cost of sales. Okay, within cost of sales must always match your revenue with respect to categorization. Okay, but subject to certain adjustments. I'll come here, cost of sales, PMS. Okay. AGO, GPK, kerosene, and loops. Now there will be one special one for cost of sales again, because of valuation and write-off, stock loss, valuation loss based on requirement of IAS 2 that says measure inventory at the lower cost and net realizable value. All of that could create what we call loss, cost of sales loss, which means it's a cost of sales loss adjustment or cost of sales adjustment. Cost of sales loss or adjustment, I'll put it like that. Okay, and therefore, I could say this is 100, and on that basis, this is 100, 200, 300, 400, and 500. Okay, I could have my expenses, which I can categorize as personnel cost. Okay, under that I can have basic pay. I could have allowances. I could have medical allowance, medical and welfare costs. I could have group life policy. I could have things like ITF contributions. I could have things like workmen compensation acts, workmen compensation contribution. I could have training and development. I could have severance package, severance pay. I could have bonuses, bonus pay. I could have, what can I close it with again? What kind of contribution, what kind of personnel expenses? Okay, let me say travels. Okay, now other expenses, I could have office expenses. Other office expenses, you could have things like consumables. You could have things like printing and stationery. You have things like, give me examples. Okay, that's going to be on that distribution. What again? What are the costs organizations can lightning? Okay. Lightning. We could have repairs. We could have maintenance, facility maintenance. We could have rent. We could have, just give me one more or two. We could have IT expenses. What again?
Power. Computer accessories.
Oh, that's IT. Everything will come under IT.
What about transportation expenses? Like transportation expenses.
Okay. Travel and transportation, which might be business. let's just assume that that is the population of our expenses. Okay. What other category of expense? You can have selling and distribution. Distribution. You could have things like trucking or haulage costs. Under that, you have for these categories. Remember?
Personnel commission.
Okay, I'm still coming that cost of sales. I replace it with trucking. Okay. Yeah. No, I think I didn't put minus there. Plus, I change plus to minus. Okay. Commission. Commission. I also bring this down. Plus trucking. Also minus trucking. To minus commission. Okay. Now, other one are finance costs. Sorry. Okay.
How about miscellaneous expenses?
Okay, I'm coming. Miscellaneous what?
Expenses.
Okay, well, let's just leave that. We'll put it under as well. Finance costs. I'm coming. Marketing, selling, and distribution. Okay. Finance costs. Bank interest.
Advertising should be under selling and distribution.
Now, advertising is not directly related to sales. It's a general advert. You can't attribute it. Let's say banking interest, overdraft interest. Let me say bank loan interest. Let me put loan. Okay. And income taxes. Therefore, I have current tax. Okay, my current tax, I could break it into company income tax. I could break it into tertiary education tax. Let's stop at that. I also have my TIFA tax. Therefore, there's something I also want to add to my liability. I didn't have non-current liability, which means I can create loan. Okay. Okay, I could have long-term loan. Okay, in that I could have bank loan. I could have bonds. I could have deferred tax liability. If I have to change my category here from long-term loan to long-term liabilities. Okay, therefore, no, I have to shift this. This is part of liability. Therefore, okay, therefore, this is 500, 500, 500, and this is 500, and this 100, 200, 300. At this point is control. Okay, now let me complete others. Interest income, these are control. Okay, expense, these are control. Therefore, my expenses all will carry 500. Sorry.
We didn't add bad debts and provision for bad debts.
Okay, we are going to come there. Thank you for that. Okay, cost of sales is 100. Personnel, that is 200. Office expenses is 300. Now let me put another category here. The bad debt we are talking about. Okay. Bad debt and impairment losses. Under that, I have bad debt written off. These are actually those ones that are bad totally. I have impairment losses on receivables. The same way we have impairment gain, and we have impairment on investment of financial assets other than receivables. Okay. Now, doing that, I call this is the 500. Sorry. This 100, 200, 300. Okay.
That's another class, sir.
Yeah, that's other class. This is 400.
All of us.
All of the
Okay, this 500. And therefore we have 100, 200, 300, 400, and 500. Now commission is 600. You have 100, 200, 300, 400. Finance cost is 700, 100, 200. Income tax is 800. This is 100, 100. Okay. Now I can copy the 700 downwards. Okay, now within the income tax is further broken down. I can have 100, 200. Which other thing was broken down? Okay, I have 500 of selling and distribution, and under selling and distribution, we still have trucking and okay, therefore this will have been here. This will have been 100, 200, 300, and 400. Now, that means this is 200. Commission is 200. This will not be there. This will be over here. Okay, do you get it now? Yeah, therefore, this is 100 all true. Sorry, let me copy that. 200. Okay, I think we are clear now. The cost is clear. Now, what that means is that we have created 4 levels of coding before we sum it up. Okay, I can call it unit class. Okay, but most of these other ones do not have unit classes. A unit class is like, under this property, I can break it into land and building. Office equipment, I can break it into individual components. Computer equipment, what's it called? Probably you have TV, you have all other equipment. Motor vehicle, you can have categories of motor vehicle. Browser, truck, office, cars, and all sorts of things. But in this case, they have no class. Okay, therefore, I'll lock it up there, up to this level. Now, this personnel cost, remember, basic pay, 100, 200, and I think I can drag it down to travels. Okay, therefore, that's up to 1,000. I'll just change it to 950 so that it doesn't enter 4 digits. But you can still make it 4 digits, which means everything will be 4 digits all through. Okay, 100, 200, under this. Now you make it to transport. Okay, 900, that's okay. Bad debt, that's control. Therefore, I come back, I locked all this. Now, I can easily come down and just drag this down to generate for all my stuff now. Okay. Now, this is my GL. Okay. Therefore, I've generated my GL. Now, this is my GL. Now, let me now show you what I'll call control account. There are control accounts at different levels. And when I say control account here, I'm not referring to contra account. I'm referring to account based on grouping X. And I use red to highlight it. And you see why I said they are control accounts. Please learn that when you are working on spreadsheet, even on Word document, always try to be saving, because sometimes you might be frustrated that all what you have done wipe off, and it's not always going to be a good story. It's always a bad story. Imagine everything we have done so far now, Excel malfunctions and it wipe off. How do I start? You know, not that you have no choice of starting, but it's like heaven should fall. That's why sometimes you need to set your system on auto save, or consciously you are saving it. So that even if you didn't save the most recent, you can easily start from somewhere rather than starting from the beginning. Okay, now this is my code. Now with this, I generate my code, but let me now explain to us control account. Control account means that this is an account that is more or less like a parent account. You can't post into the account. In a conventional application, such account will be locked. You can't post into it. For example, you can't just go into your GL and call up asset account and you want to post into asset. It's not, it's a control account. You now need to drill it down to say which asset, PPE. Also, you can't go to PPE and say you want to post. What is PPE? You now have to go to the main account, which is the property. And again, I can also make property a control account if I have to break it down into land and building. I can even make land a control account if I have to break it into land in Ekpe, land in Lagos, land in Abuja. which means you don't post into those contract accounts because those contract accounts will aggregate everything under it. And that is how it aggregates up the ladder. And that's why you don't post into those contract accounts. If you have a robust ERP system, it will be locked. Even when you want to post, it tells you no. Which means you must go into the main account to post, because those ones are contract account, not account for postings. And that is, all those that are in red are control account. Again, it's not cast on stone. You can create as many contract accounts depending on the granular level of your transaction accounts that you have created. And that is it. Therefore, at any point in time, when you see this coding, you can easily say, okay, I call up a posting. I know that my posting for asset must start with 1. And after that, my posting for property must start with 1 again, which means 1,000, 100, 100. You can say now, what class of property? You can say that's how it follows through. And in this case now, we have, what's it called? 12 digits. Is it 12 digits? Okay, it's not up to 12 digits. We have not considered the other one. Let's concatenate it along with this last one. Therefore, it gives us a 12 digits. Okay, this other one too. The reason why I didn't drag it down is that because of the red mark I've done, so that it doesn't link everything up so that it confuses the position. Therefore, I can copy and paste on all the black cells. I think I didn't copy on this. Check. Okay. 0. I don't put switch here. Okay. I think all is right now. Everywhere you see is 0. 3 zeros in yellow, it shows they are control account. Sorry. Yeah. is 0. This is a control account here. Yeah. Anyway, you see 3 zeros highlighted, and they are highlighted in yellow cell and red print. You know that they are control accounts. Okay. Therefore, I can add this to it to show you that all of these are control. And let's put them in oranges. Yes, it's too dark. Yeah. It's the most important thing in setting up an accounting system is your coding, and you use it to create what we call a chart of account. Okay, what we have simply done is that we have provided a semi-chart of account. It's not complete. For financial reporting purpose, you have to extend this chart of account. This is a system chart of account, which means on systems like Oracle, Power Enterprise, SAP, Sage, Peachtree, and etc. But for financial reporting purposes, where you want to present financial statement, I will extend this chart, and I will extend it based on the following, which will represent those elements, subclass, grouping, and everything I've done. And that is what you can see here. You are going to see it under, let me share the slide. Okay, you see it under here, which means this is our code that we developed earlier. For example, this is our code. You can see the coding. And when you check it carefully, you'll find out that it belongs to asset code, class, and all sorts of things. Okay, but you define your coding in your accounting system. Now, what matters now is this 4 categories. It can be 3. If it's for financial institution, it can be as 3, but for a normal company, it will be as 4 or more. And what are the sections you are going to create? You are going to create element of financial statement, which means you must demonstrate whether it's an asset, liability, or otherwise. You must create grouping in terms of asset will be classified as current or non-current. You must create within the current what classes of asset is it. Okay, and also details. Let me show you an example of the one I've done, which is ready-made, but we are going to demonstrate how we do that now. This is the one I've done before now. Now, see what I've done. This is my trial balance, and you find out that in my trial balance, I've shown that all these items qualify as assets. They are non-current assets, and the class is PPE. And if I want to do further, I can break it down if it's relevant to me to say, if I have, for example, many items of property, I want to group it as one, I can do that. If I have many items of motor vehicle, you can do that up to any granular level you want to do it. Okay, and that is how you could see it all through to the end. And especially when you get to this, you can see that some extended to that 4th level. Retained earnings, you have dividend, you have retained earnings brought forward, and all sorts of things. Especially when you get to expenses, you can see I have expense. Expense cannot be categorized into current or non-current. Therefore, what do I have? I have the class, personnel cost. What is in personnel? Salaries and wages, pension costs, training costs. What is in administrative? I break it down into another head. Training, auditor's fee, professional fee, repairs, maintenance, other IT, etc. And that is how I did that up to I got to the extreme end. Okay, you got there, you have depreciation. What kind of depreciation? You get what I'm saying now? And that is what we do. Income tax expense, to break it down into current, non-current. And this is what we are expected to do. And when you have this, you have what we call a full chart of account for financial reporting purposes. And this is where, if you have this, you already have your financial statement. If you have this, you already have what? Your financial statement. But let's quickly go back to our initial worksheet. Okay, I think we didn't create depreciation as a line in our expense. It came to my memory now. And it's huge. Let us create depreciation. I can create it as this last item, depreciation. Okay, we have how many categories of assets? I think we have 3. Depreciation of property, which means the property aspect to depreciate is the building. Depreciation of office equipment. And depreciation of motor vehicle. Now, okay, remember it's still 500. Now, but this is 900. And this is 00. This 100, 200, 300. If I can extend this. Okay, we've done that now. Therefore, if you check this line of GL now, how many lines do you have? We have 117 lines. See, in how many minutes we are able to create 117 GL lines? Okay. Now, okay, let's assume we have done this, and that's how we're able to generate this account head with their description. We now have to generate a trial balance. Imagine our trial balance does generate aggregate of debit and aggregate of what? Credit. What I'll now have to do is to make it a single balance column. And what will I do? I'll come here, I'll say balance. Now, debit and credit are opposing. Okay, what will I do? I can simply say debit minus credit, which means my debit will always be positive and my credit will be what? Negative. It's a convention. You can change it to be credit negative, the other one positive. It doesn't matter. But you know your accounting system to say anytime I see minus, it is credit. Anytime I see positive, it is. Do you get what I'm saying now? In other, which means is your accounting system, you define it. Okay. In this case, I can drag it down. Therefore, I can vividly see those that are debit balance and those that are credit balance. Okay. Now, that is what I did, so that when you sum it up, it must always be 0. It must always be 0. When you sum it up, for example, now, Can you see that is 0? Okay, because if you have a robust system, your trial balance must always agree. It's an abnormal situation for it not to agree. And that's why when you use ERP system, your trial balance will always agree because it doesn't allow you to post one leg. Okay, unlike if you use any other system that are not enterprise in nature, you could still have some of those mistakes. Okay, now with this trial balance, already have my account on the premise that I know the requirement of IS1. Now, IS1 has given me basis of presenting financial statements. And what I've done here is that I've already more or less created a template. And that template, I've referenced the section of IS1 that you can go and study that will tell you why I created such heads. Okay, you can see that first, I follow the convention of IS1 by presenting this financial statement with my balance sheet in the order of permanence. Okay, in this order now, I have to create asset into current and non-current. Now I've grouped my current assets up, followed by my non-current asset up, followed by current assets. Okay, in extreme situation, I might have non-current asset held for sale. If you could remember the provision of IFRS 5, okay, but it's not a common stuff to find, which means my total assets is the sum of all those categories. My equity, I've further broken it down into share capital, share premium, treasury shares, and etc. My current, non-current liability, I've broken it down, and my current liability, I've broken it down, including liability associated with asset held for sale. And I have my total liabilities, and I sum it up, I have my total equity and liabilities, which means you must already understand IS1 and you create a template for it. Secondly, I create a template for the statement of profit or loss and other comprehensive income. Okay, I more or less chose the order of function. You know, you have two options, either by nature or by function. But most practice or industry is by way of function. Okay, but I'll give you an assignment to go and look at MTN. MTN presents theirs by nature, and probably it might be an industry standard. Okay, now by function means I group those functions in terms of revenue, cost of sales, administrative cost, distribution cost, and like that. Okay, and that's what I found myself here, which I've created. And also I have other level of income and expenses that are outside operations. Thereafter, I have my finance costs, I have my income taxes, and I have my other items that affect my balance sheet, my other comprehensive income, such as evaluation and etc. Okay. Now, that also tells me that I didn't create within our GL line, I didn't create items of other income, such as all those other income, other comprehensive income. Therefore, I can create it under income. The beauty of Excel is that you can cut and paste. I think I'll just need 3 lines. Under this, I'll have other comprehensive income. Under that, I could have evaluation gains, because I already create evaluation reserve, and I also create fair value reserve, fair value gains or losses on financial assets at measure at fair value to other comprehensive income. Therefore, I can create this at, this is still 400, but because it's other comprehensive income, I create, okay, other comprehensive income is 400, 400, okay, and I create 100, 200, okay. Therefore, what's control there? There's a control there. Okay. Okay, I've created that. Okay, that means creating it now is 120. If you check my lines, it's 120 now. Okay. Okay, now, I've gotten my trial balance up to state. The next thing is for me to have my profit or loss, another comprehensive income, and have my statement of changes in equity. Okay, statement of changes in equity has about 3 sections. First is your balance you brought forward as equity, broken down into different class of equity. And you also bring items of profit or loss. You also bring items of other comprehensive income. And you also have what we call transactions with owners of equity. That's where you take care of every item that affects equity, but do not pass it to profit or loss, nor passes to other comprehensive income, such as when you issue new shares, when you repurchase shares, when dividend is paid, when there is recapitalization of profit as bonus, okay? Where you have all other issues that affect equity without passing to profit or loss and other comprehensive income. Okay, that is that. Now, let's now look at how we do that. I'll now more or less make a shift to my dynamic spreadsheet, which I've designed. Now, in this case now, you could see that I've created a drop down. Now I've created a drop down. A drop down means that given that I have this, my preliminary GL account, I'll now have to create a chart and say, leasehold property, what does it belong to? I say it belongs to an asset class. The asset, is it grouped as current or non-current? I come here, I say non-current assets. Okay, which class of asset is it? It is property, plant, and equipment. I drag down up to where I have property. It is more or less arranged in ascending order. Property, plant, and what? Equipment. Now, what class of property, plant, and equipment? Given that they have different levels, I check here, but again, because we didn't create it into that level, you won't have this. Therefore, I'll just pick non-applicable, or I can create it to be blank, and I'll show you how you can do that so that it doesn't show non-applicable. Okay, now, at every point in time, you can select, and that's how you do it, on the basis that you know your GL account, and you can group it appropriately. And that's what I've done. Now, how do I do this? It's very simple. You can go to your spreadsheet. You can go to your spreadsheet. You'll see what I've done here. I've created it here. Okay, but I'll show you how you can do it. There are 2 ways you can do it. If I want to create the dialog box now, let me just pick the one for element. Let me say element of financial statement. If I want to create that dialog box, I'll just click this cell and say, I'll go to where's my data? I'm checking something here. No, it's not insert. Okay, let me go to my data. Let me go back to my data. Okay, I'll do data validation. Can you see it? Data tab. From there, I went to the sub tab of data validation. Now, I'm not looking at value. I want to do listing. I want to list items so that I can select. And what is my source? I can expressly type the source if they are short. But if they are long, I can't type it because there's limit to the breadth. Okay, therefore what I will do is that because elements are short, I can start with select so that I'll know that I've not done anything yet. I'm now required to select. First one is asset. Comma is to show that you are creating another list as second or third list. Liability, equity, income, and expense. Now, I can stop here. If I stop here, what will you see? If you come here, can you see that there's a drop-down sign? When you click the drop-down, what can you see? You see select, asset, liability, equity, income, and expense. Therefore, I can select anyone, and that's how you create it. But because if I have something that does not fall into any of those things, therefore, what I can do is that I will have created non-applicable as the last one. Okay? Sorry. No. Let me cancel it and go back. I'll have created non-applicable. Now I'll go back here. I'll create what? Let me expand it so that I can see it clearly. Now I'll create comma. I can just say non-applicable. If I do that, I apply it. And when I come here, what will I see? If it's not applicable, I click non-applicable. But non-applicable might not look beautiful. Therefore, I'll just do something. I'll make it a blank cell. And what is the blank there? I'll come back here, go back to my data. Now, instead of putting non-applicable, I can leave it blank after the comma. When you leave it blank after the comma, what you simply do is that when you come down here, what you see. Okay, sorry, okay, I'm coming. And this has limitation because I'm inputting directly, and I'm going to prove it to you now. Now, we didn't recognize that. Let me leave space and let me see whether it recognizes it. It still didn't recognize it. Therefore, let me manipulate it further. And you now see that it's not an exact science. In Excel, if I put double column, it shows that I have something, but it's null. Okay, in that case, what will I do? I see it. Let me see whether it's going to recognize it. Now, it only recognizes it as this. Okay, this is still fair, but this is not what I want. I just want it to blank out. Therefore, I can't get it through direct input. What I can now do is that anywhere within my spreadsheet, I might create something like this list. Select.
I think under that data validation, so there's a button there that says you can ignore the blank.
No, I'm still coming to those ones. You can do that. There are 1,001 way of doing those things. I just want to open your mind to certain things, okay? But you can explore it further. Equity, income, and what? Expense. Therefore, what I'll do in this case is that instead of going through this route of typing, I'll just come down here and go to my data validation, data validation, my listing. Now, when it comes to my source, instead of me typing, I'll just go back and link with my source. When I link with my source, I say, okay. When I come here, what will I see? The same thing, which is the best method. But you must ensure that when you do this, you go and encrypt this so that nobody can delete it. One way of encrypting it is to say, I click this line, for example, or I just click this. When I click this, Okay, I can go to my review. Okay, when you get to your review, I'll say protect sheet. Now, what do I want to protect it from? Whether I want to protect it from you, what's it called, seeing it or any other thing. But what I can do is that, what matters to me is that I don't want you to delete this column and this row. On that premise, what will I do? It will require me to create a password. Let me just create a password like ABC. Remember, the password is case sensitive. Okay. Thereafter, I click OK. It asks for confirmation of that password, ABC. Now, any attempt for me to delete, what will you say? The cell, which means this has protected me, so that even if you don't know anything you want to delete, you can delete it. And what I can do is to hide it, so that you don't even bother to know what is there. But because I've locked it, I can't hide it, except I go to that lock and say I can hide. You can see now, let me go back to that unprotected sheet. I can open it with my password, ABC. Now, I'll come back to say, what I want is that still allow me to protect it and also allow me to hide. Let me see whether that function exists. Okay, that function does not exist. Okay, but if I don't want to hide, another way I can do it is that I can turn this to white. I'll just change it, the color to white, so that you won't even see that anything is there. You won't see that anything is there, but something is there. Okay, can you see it now? Something is there, but you will not see it. That's another way. That's the trick we also use in model, that I'll lock it and I'll put it in white so that you won't even notice that something was there and you can't delete that cell. Okay, but that is that in that manner. Let me go back. Which of the screen are you seeing now?
You can still see this.
The same screen I'm sharing.
Exactly.
Yes.
Okay. Okay. Therefore, that is my objective. Now, another thing you need to know is this. I think you are familiar with Excel. Whenever you want to create a dynamic operation in Excel, you must create it by way of table. You know, what I did there is not by way of table. Therefore, if, for example, tomorrow I want to add something, if I add it, it will not see it, except I go back and reconstruct the formula. But that's not how you work. You must be able to do something that anything repetitive, you model it so that you don't repeat it again. It's only new thing that you repeat. In that situation, what I'll do is that, or before that, you know, we are talking of, what's it called? Creating blank. I can easily create blank here. You know what I have here before? Only stop at expense. I can make this last cell to be blank. Therefore, I'll come here and update the validation, which means I'm saying, instead of pick all this, you pick up to this level, plus a blank term, and I'll say what? Okay. When I say okay, when I come here, what do I see? Including blank. Therefore, I can select blank if it's not applicable, rather than put not applicable or put signs, so that it looks beautiful, presentable. Okay? Now, as I said earlier, imagine I want to create another line. Before now, if I put anything under this and say, let me just create something fixed. If I go here, you can't see anything fixed because it doesn't see it. But if by the time I have it, what I did was to create a table. Remember, how do you create a table in Excel? Okay, you go to your insert and you see table. Once you create a table, what he has done is that he has created this table for me. This is my element. Now, at the time I'm creating this drop down, what I will have done is that at that time I'm creating this drop down, what I'm selecting is that I'm selecting the table. Now, if I do this, automatically, if I come here, he has seen this. Now, if I want to create anything beneath, you know that it stopped at express. Imagine I want to create anything next. Can you see this sign like one small arrow here? Shows that that's the end of the table, but it can be extended. Therefore, if I want to extend it, I add another thing, I say fixed. The table is extended. When you go down here, can you see fixed? Which means you don't need to. When you create a table, it's dynamic. And that solves your problem. Now, if I want to create blank, I can just create, I can put Q, and later I'll come and delete the Q. Do you get what I'm saying now? It has created a blank. When I come down here, I can see my blank also. And that is that. That is how I created all this drop down. And it's now left for you, based on your understanding of IFRS and presentation, to now classify into assets, liabilities, and etc. Now, let me go and copy. This is blank. Let me just take it back to my select. Now, remember that everything here is blank. Is that not? Everything here is blank. Everything here is blank. But if you click on them, let me expand this. If you click on them, you see that there are things like formulas. Can you see them? They are like formulas, but they are not formula in its real sense, not a formula you write like that. Okay? Can you see them? Now, this is just a mere linking to pivots. Now, I will now use that table I've created with the chart to create a pivot. It is that pivot I will link to my template to make it dynamic. Now, what will I do? Remember, the most important thing here is this. I've created a table and I've created a chart of accounts. But now, one by one, you only do the setup once. Which means the way we set up our GL now, we set it up once and use it forever. The only thing is that when you have a new item, you come to add that new item, and it's only that new item you're adjusting for. Or if you want to reclassify your accounting system, you can also do that. But it's not something you repeat every time, every day. Therefore, what I'll do is that I already have a ready-made grouping that I've done before now, which you don't have access to. Okay? I can just go there and copy just for this demonstration's sake. I've already completed it before. Okay? All the chart. I can just simply copy and paste it. Because it's the same data. I'll just copy and paste it. Do you see the new screen? Can you see the new screen I opened? Where I'm copying from. Did you see me copy something now?
Yes, yes.
Okay. Therefore, I return to my initial screen. Okay, I can copy and paste, but that's not how you do it in real life. You sit down to set it up. It's one tax, one-off tax, okay? But because I don't want to waste time, I just copy and paste. You find out that I've copied and pasted for everything. Now, the same blank cell you are seeing here, everything is blank, Abi, but I told you I'm making it from pivot. Now, my pivot is also blank. Okay, but what I can do is that because I've created the pivot before. I'm still going to show you how I create the pivot. Because I've created the pivot before, what I'll just do is to go to my data tab and go to my refresh tab and refresh all. A click of a button in a second, you get your financial statement. Now, it has given me the results. This is the financial statement end to end, but this is not presentable for financial reporting. But because of that, I know how to present for financial reporting. I've linked it to this. And when I go back to those blank cells, what do you see? My account is prepared. When you click here, it will tell you that I pick it up from a trial balance, which led to the pivot. And the pivot, the class of it is element as an asset. The grouping is not current asset. The class is PPE. If you come here, there's no investment property for that period. If you come here, it tells me everything. If you go to your income statement, it tells me my revenue. It tells me there is a cost of sales. And this is how I present it. And when I go to my statement of changes in equity, it gives me my position. And within a space of a button, I have a balance sheet that agrees. 300, 155, 300, 155. And the same pivot, I'll use it to populate my notes to the financial statement, all in all. Because at the time I'm setting up my system, I already know the endpoints. Therefore, I work from the endpoint to setting up my accounting system. And that's the beauty of it. Are you getting it now? That's the beauty of it. Now, in a simple sense, I've done it. But how do I arrive at this? Is that first, let me show you how I create the pivot. Now, remember that I told you that for you to create a pivot or any dynamic model in Excel, you must use a table. Therefore, I've already created a table. What then will I do? I will come here and say insert. Insert what? Pivot table. It selects all of that table. And it asks me, do you want to insert in this new, is in the existing worksheet or new? You must always create new. Okay, I create new. When I come to new, it gives me a blank cell, a blank sheet. Now, this is a blank sheet it gives to me. Therefore, the first item I need is that I need my element of financial statement. I drop it on my row. Can you see? It gives me the 5 classes. Now, I needed my trial balance value, the model TV. I'll put it in the value section. Now, it has vividly told me what my value of asset is in totality. Now, but I need to break down my assets into current and what? Non-current. Therefore, I click on this, it showed me the dialog box, and I say, I want to group it. Therefore, it groups it for me. Now, I can go here to make it presentable. This table, I can design it. Can you see design? You can see what I'm doing?
Can you see this?
Yes, that's what I'm coming. Now, can you see design on top? On Excel, I'll click design. In this design, look at this report layout. How do I want to present it? I'll click here. Do I want, look at this layout, even though it's small, but you can see it on your own Excel. Let me see this layout. I think I would like to present it like this. So that at a glance, I can see it. To say, okay, my non-current asset, my asset is broken down into current and non-current. And what is it? Current is sum of 110, non-current is what? 189. Now, I don't want to stop at that level. What are the contents? What are the classes or items under current? And what are those under non-current? I come here, I need my class. I also bring it to my row. It told me what make up current assets. cash and cash equivalent, inventory, other assets, and trade and other payables. Now, if I still have additional grouping, therefore, I can still go further to check based on my chart of account. I still need more details for breakdown. You can have detail 1, detail 2, detail 3. It's what you want to achieve. Therefore, I bring my detail down. Those that have detail, you put it there. Those that don't have, you put it there. Now, those that don't have details are non-applicable. Those that have details broke it down for me. And I do that. Okay, I can put it to the nearest one there. Okay, now he has done this for me. I can still present it in other manner that is more suitable than what I'm seeing because I don't really like what I'm seeing. Therefore, I can still come to this design. Now, first, look at this report. Can I find a better reporting style? Let me see whether I can find a better reporting style. Does this look better? No. Does this look better? It's better than the immediate one, but it's not better than the first one. Abi? Does this look better? I think this is nice. Is that not? Out of the 4 we have checked, and this is better. Abi? You know, you can iterate, or we should go, let's try the first one. You understand? Therefore, I've seen out of the 5, I think I'll go for either of this. I'll go for either this or this. Okay? This is the first one we had. I can go for this. Okay? Now, if that is the case, I can come and change the stuff here by saying which of this stuff I want to use to make it beautiful. I can use this color. Can you see how it's bringing out the beauty? Okay, if I use this color, or I might decide to use something like this color, but this doesn't look nice. This also looks perfectly well. I saved it. Now you can see that it has grouped my current assets, it has grouped my non-current, it has grouped my total assets. Now again, it depends on your style. Do I want to show it the total before the breakdown, or I want to break it down and I sum the total? Therefore, you come to this and say, do you want to sum by row and sum by column? For financial statement, you don't sum by row, you only sum by column. All because of, if you sum by column, it will tell you whether your balance sheet agrees, because it must put a 0. If it's not 0, it then means that there's something that is wrong, or you have not matched or mapped a particular item to a class. Therefore, it will leave that item out. For example, if I want to test, let me find something here and delete the mapping. Let me find an item here, and let me just put select. You'll see what it's going to give me. Let me just put select or true. Probably because I've not mapped it, I omitted it. Even if it's just one select, it's going to group it as head separately from others, and there will be a problem in my balance sheet. Now, let me go back to my pivots. Update and refresh. Now, you see that my PPA has changed. If you come down, you see that it created a select. What class will I say is select? Where will I map it to? Therefore, because my financial statement, the template does not recognize select as anything. If you come to my balance sheet, you see that my balance sheet no longer agrees. This is 300,155. What is my asset? 276,374. Why? Because there is something you have left out. Which then means that if I go back and do the needful, which I already have before, let me go and copy it from where I copied it from in the first place. I copied it from here. Okay, what I changed was this. I'll copy it back. From there, if you go back to my balance sheet, you know it's 146, Abby. Now, let me update it with refresh, 170, and my balance sheet agrees. Okay, another problem you can see is if your trial balance is not in agreement, probably I omitted, let me omit one figure there, let me omit this last figure. Imagine I omit this last figure. Let me copy it somewhere, I'll return it later. Let me just delete this. My balance sheet, you might not know that it doesn't agree. By the time I come to my financial statement and I update it, look at it. My total equity and liability is 310,756. What is my total asset? 300,155. How do you get to know? In your pivot, you see a balance. It shows that your trial balance did not agree to the tune of credit of 10,601. From there, I can go and review my balance sheet and say, okay, I deleted something wrongly, or the entry will pass, there's one leg that is outstanding. But again, your trial balance pool from a good accounting system will always balance because you won't allow one leg entry. Does that make sense? Okay, therefore I go back to update it, just a click of a button, and everything aligns. Okay, that is that. Now, what else can I share? If you come here, for example, let me say I want to create notes to the financial statement. Let me say I want to create notes to the financial statement. Now, let me say I want to create note of cost of sales. Or let me say revenue is the note I want to create. And in my revenue, I have sales of AGO or PMS, sales of AGO, sales of DPK, and sales of loots. Now, if this is my Naira column, NGN, therefore, what will I do? How did I create all this stuff of formula you saw? It's not a formula, it's just a linking. Therefore, what will I do? Is that when I come to this note, I'll just say is equals to, I'll go back to my pivot. Where do I have my sales? Under revenue or income. Under income, can you see revenue? When you see plus, it means it still has further breakdown. I click the plus. Okay, before I link, I think I'm supposed to have expanded it. Now, how do you expand your pivot? This is already compressed. If I want to expand, I can click it one by one. I can click it one by one. But it doesn't make sense. Do you understand? I can expand it once and for all. Do you get what I'm saying now? Okay. Now, let me now, I don't have revenue grouped into those items. Let me pick, for example, I have admin expenses a lot. Okay, let me pick admin expenses as the breakdown I want to create. Therefore, admin expenses rather than admin expenses. Therefore, what I'll do is that I'll just link it. Auditor's fee, you know, you are setting it up and it's one-off. I come to my pivot. What is auditor's fee? This. Next, I come here. What is this? This. I come here. Other costs. I come here. Other expenses. Other IT expenses. I come here, other professional service fees, 26. And I come here, repairs and maintenance. You know, your setup, you have to be careful because it's like garbage in, garbage out once you have developed it. Therefore, I can come here and say total. And that's how I create my notes. Now, how do you know that it's dynamic? So that when you want to use it for another year or another company, how do you know it's dynamic?
Question, sir.
Yeah, I'm coming. 1 minute. Yeah, what's your question?
Because we said we can expand the pivot, the pivot instead of doing it one that we can do it at a go. So how do we do
Yes,
it?
okay, I'll come back to that. Okay, now imagine I sum it up. Dig I'm saying now. Now, how do you know that it's correct? Let me go and do something for you. Let me go to my trial balance. Okay, let me go back to my pivot. Now, come and see the beauty of this pivot. Can we look up? Now, look at the beauty of this pivot. When you click anything here, it can show you the breakdown. It will generate what we call a lead sheet. A lead sheet is that it's leading you to the source. Now, if I click, for example, if I click the total of retained earnings, it will give me what make up this retained earnings. And you create it under a new worksheet, a new sheet. See, independently, it created the sheet and showed me what is there. So that if I want to trace, I can just trace. I don't need to be checking the whole of the file. Which means it has shown me that dividend and retained earnings brought forward is what make up that line. You can see now, you can do it at group level, you can do it at individual level. Now, let me show you at individual level. Let me say I just want to check which item. Okay, let me say I just want to check salaries and wages. I'll just click only this. It shows me all what make up salaries and wages. Which means I'm not even checking the whole of personnel costs, just salaries and wages. It shows me that I have annual leave allowance, I have fuel reimbursable, I have entertainment, I have this, I have that. Which means if auditors now say, generate your schedule that support each classification in your account, which will form your notice account, you just one button, you are generating it one by one and you are giving it out. If there's issue, you can trace it one by one without carrying all the trial balance and looking for what is not missing. Okay, now, let me now show you something. Even though what you find here is so interesting, but if you, for example, you don't have auditor's fee to be 2943, Abi, let me go and delete that auditor's fee. Yeah, let me find my auditor's fee here. Auditor's fee. Okay. I have two categories of auditor's fee. Let me just delete something here. Let me just say there's one mistake here. Let me say I put A here. G and sign, it shows me value. If I run my account, now, for example, and I update it, it will show me some errors. Now, it didn't show me error here. Can you see error in my income statement? No. The only thing is I didn't give me my administrative expenses because there's one error somewhere. Where is the error? You will see it vividly here. Can you see the error? But this will distort my account. In order not to have this, even when there's error, it should not scatter my template. What I'll now do is that I'll now insert error formula in Excel. But The error formula makes your work look better and you can easily trace, but again, it has its own shortcoming, whereby you might create it as a blank, such that what I'll do is, in setting up this formula, what I'll have done is that I'll come here and say, if error, I open the bracket, then what should you do? Comma, what should you do? Return blank. Remember I told you in Excel, will I call this apostrophe or what will I call it? Not open and close. No, no, or mute.
Inverted
comma. Okay, let us say inverted comma 2 times. Apostrophe is the one, Abby. Yes. This is inverted 2 times. You click it and you say close. Abby? Yes. Now, when I have it like this, what does it show? Blank. Therefore, you allow me to sum it. Or I say, instead of blank, I say if error, return 0. But 0 is dangerous because it won't tell you you have error. But rather, let it show blank so that if I have error, I see blank. Blank is not 0. Blank is nullity, empty, which means there's something wrong. Like if you look at our investment property here, it shows blank, which means it does not exist.
Yes.
It's quite different from 0. Therefore, what do? I rather put blank instead of 0. Or I can put a trigger. The trigger will say, if there's any error, just show me error. If there's error, just show me what? Error. So that I can easily spot the error and go and correct for the what? Errors. Now let me go back to my trial balance. What was the item? Okay, I think I've returned it. Where is it? Auditor's fee. Okay, I've returned it, have you? Yeah. Therefore, let me go back. It's now normal. Okay, which that means that if you check my link in here, I've done if error for all of them. And you can see that it's showing blank. Okay, because even if I have error, I can more or less narrow it to where the error lies. And that is how I present my financial statements. Now, look at the beauty of it. Let me delete this. I don't need it. Be careful that you don't delete your main worksheet because you might not be able to recover it. Now, this is my stuff, everything. Now, let me prepare another account. Let me say this was last month, Abby. This month, I generate a new trial balance. What I'll do is that let me go back to my trial balance and double it. You know, what is my profitability here? I had a loss of 243, Abby. Let me just show you. Or let me just copy 2019 results here. Let me say this is 2018. I want to show you something. This is 2018. Let me put it as 2018. Now, these are 2018 figures. So that I can easily make comparison. Okay, I'll do the same thing for my balance sheet. You see what I want to show you. There's my balance sheet. This is my balance sheet. I'll also copy. Now, what I'll do is that, let me say my trial balance. I want to change my trial balance as if our performance this year or this period is doubled last year. Therefore, let me just copy all this figure. Let me copy them. This is the original figures. Let me copy them here so that I don't lose track of them. Let me create like 2 lines or 2 lines here. And let me copy them. Let me paste value so that I just keep them, I reserve them. Now, what I can do is that let me double those values. Let me double them. I'll do that for all. Okay, I've done that for all. Now, this is a new trial balance, 2019 trial balance. You all see it. Now, look at my account. I've not updated it. And my profit or loss. Now, let me update it once and see how you can present your account just in 1 second. I go to my data and I refresh. I refresh all. Can you see my account? My loss doubled if you compare it together. See my balance sheet. Automatically, it agrees 600, 310, 600, 310. Which means every time I want to generate account, once I have to balance, I just input it, which is similar to the dynamic model we created on performance management report. You saw, can you remember the one Eno also constructed for RAC? Do you get what I'm saying now? And that is that. Which means this is how you make life easy. So that if you have 1 or 2 items, just on a click of button. That's why you could see me preparing as many financial statements as possible. Because you have already done your granular work. Every other thing is like you are just waking up to, well, this is account that people will be doing spreadsheet, A plus B cell, A plus 1 plus, and they'll be doing it for weeks to prepare an account. And that shows us our position, very straightforward. Now, at this level, any question? Any question?
Yeah, I want to ask
Now,
question.
Let us go back to this place. Can you see that our figure has changed?
Yes.
That is it. Everything from A to Z. Yes. It's only little things you now have to just check, whether disclosure, new items, and that's all. If you have new class of expense that was not there before, you just increase the row by 1 and link it. Again, it becomes a new, what's called updated template. And that's how you run it periodically.
Bobby, can I ask a question? Is it possible that Oracle will be able to present FS like this?
No, Oracle is not a financial reporting. It's
okay, GODP.
It's enter yourself. You cannot have what we call a reporting tool.
Okay.
Like the GODP and every other caseware and co, which uses this methodology, only that they've now converted to an application. But again, you still set it up.
Okay.
Because it's a dummy. You must set it up. You must know your GL. You walk to your answer. Do everything so that on the click of a button, you prepare account.
Everything come out like GODP software that we're trying to.
Exactly. Now, but the same thing you do here is what you do there. If there is a new line that was not there before, you must always go back to the setup and include it and map it appropriately to the chart of account. And that is the end. Any other question?
So,
okay.
Yes, sir. The expansion of the pivot table as in advanced.
Okay, now I'll show you something here. Now in this class, or in this screen, you expand it like this, or if I've gone here to my design, at the point of this, my layout, I'll have done it appropriately. Do you get what I'm saying now? And I can select the layout that will expand it at once. Do you get what I'm saying now? Like this layout now, I've expanded it at once for me. Do you get what I'm saying now? Or if it has not expanded it at once, or the layout is not suitable, but you want it in this manner, you can do it one by one. But another thing you can do is this. Let me copy this trial balance. Let me copy it to a fresh sheet. I can do grouping. I can do grouping. What is that? Look at it. I freeze this. Now what I can do is that I click this. You go to your data. Where's my data? Okay, I'll say subtotal.
Oh.
I click subtotal. Now, what is my, I'll say, what is my, what do I want to subtotal? Like, what do I want to group together and try to give me the sum of the balances and group it for me? I'll say, I want to sum the debit, credit, and all sorts of things. Therefore, I can say, what I want you to do for me is to group into class. Let me say class. Now, within the class, what do I want? Is it the count? Is it the sum? Is it the average? I want the sum per class. I'll now come here. In what aggregation do you need to show the summary? I want to show it per class. And I'll say, okay. Now it runs this for me. What can I see here? He has grouped it for me, similar to pivot, saying these are PPE, these are this, these are that. Okay? But he has not given me the summation.
Okay.
Therefore, I can go back to that same subtotal and update it to say, yes, but give me the summation of the debit, credit, and the balance. And what has it done? He has given me the summation so that if I go to level 1, it's grand total. If I go to level 2, it's just per class. If I go to level 3,
It's scatter everything.
Yeah, that is how you can expand and contrast. But again, before you use subtotal as grouping, you must ensure you have arranged it in ascending order. Unlike pivot.
Pivot that does everything.
You understand? Which means there are limitations to those things. That's why we use pivot as a dynamic. And in using pivot, you must always ensure that you use table to create a pivot, not just ordinary listing. And you know how to create a table on Excel. And that's how we approach it. Okay, but this is not the methodology we adopted. Okay. Any other question? Any other question?
Another method of expanding and collapsing.
Yeah.
If you highlight this whole sheet and right click.
You can do that also.
Yes.
It's just for you to click those things. You know, you can do it in different ways. You can say now. Any other discussion?
I have a question, sir.
In the next section, what we're going to do is that I'll now show you how you can now link last year as opening balance to this year transaction and use it to update this year and show comparative. And also, how do you create adjustments? Imagine you prepare your account after audit, there are some audit adjustments. How do you post it on this so that on the click of a button, it produces it immediately? Whether as a result of audit adjustment or as a result of the review you did and you spotted some adjustments. Okay, we'll do that probably in part B. Okay, any other questions so that we'll call it a day?
Yeah, I have a question, sir, concerning the trial balance.
Yeah.
In some trial balance, there's always adjustments and some journals are always raised. How do we pass it in?
And that's what I've said now. I said that is the next phase. That first, if I have opening trial balance and I have debit transaction, credit transaction, and I have my closing trial balance, how do I link last year to this year? That's one. Two, if I have adjustments, how do I pass the adjustment using this methodology that is efficient and dynamic? That's what we say we'll do next. Is that okay? Yeah. Any other question? Okay, in the answers of no question, thank you very much, and God bless you.
Thank you so much, sir.
Thank you, sir.